For joining us, and this is the final panel of what has been a brilliant day. We've heard from the topics the likes of quantum, looking just now at AGI, but also see Lord Willits and Rio. So we wanted to kind of end the day really looking at, okay, this government really wants growth. How will they get that growth? Well, they're very much looking at the high growth businesses that bring kind of a productivity premium, are really kind of innovating to drive kind of the future of the tech sector. So we have some expert panelists looking at how we really kind of get there. Obviously, the headline ambition from this government being to kind of scale the next $1 trillion technology business. Obviously, I think Chris alluded to actually just before this panel, interesting that the word dollar was even kind of used in that. And so we really want to get kind of into the conversation of, is that achievable? Can we get there? And what do we need to get there? So I'll let kind of the panelists and experts introduce themselves. And just, I guess, in terms of timing, so we have about 25 minutes of pre-prepared questions, but then really keen to open up to the floor and to hear from you. So please do come prepped or primed with questions. So I guess first, if I come to you, Adam, from KO Data, and start with, if we look at the key question of, okay, we want to achieve or kind of support the building of the next $1 trillion tech business, but do we have the foundations in place in the UK to get there? So from KO Data's perspective, obviously kind of looking at the kind of infrastructure side of things.
Yeah, thank you very much. I would say, I'm not trying to be the fly in the ointment on this panel, I would say we're a long way from getting to this objective here. Just KO Data we are a developer operator of data centers, so we are the foundational layer of technology behind all of the fantastic rock stars you see in the industry. Data centers obviously enable all of that to take place. From a UK perspective, from what we're seeing, this government, and like previous governments, are very big on ambition but light on delivery. And there are some really huge infrastructure issues in the UK. Things, for example, such as power pricing, access to the power, access to the grid, which will inhibit this ambition taking place. I mean, to give you a brief example, if you look at someone like Nscale, which is a huge GPU as a service cloud operator, they're probably, if you were to calculate who are the 10 companies who are probably most likely to achieve this goal, Nscale would be in there. They'd be one of the logos you'd look at. They're a UK headquartered company. They're run by a group of UK pioneers. They are deploying their compute, so they're deploying £230 million worth of compute, 100,000 GPUs, not in the UK. They're deploying it in Norway. They're deploying it in Norway because they can get access to the power. And the power there is 4 times cheaper than what we get in the UK. So if you look at this question and think you have a fantastic potential UK unicorn company deploying its compute away from the UK, which means obviously the revenue from that, the jobs from that are going to benefit Norway, not the UK, largely because of the problems in the UK. And I could go on for hours on this, but I won't, so I'll stop there.
We can definitely get into it a bit more, but if I pass to you, Richard, from
yeah. Sure, yeah. Thanks, Mia. And strangely, we've all sat in exactly the right order without actually intentionally sort of picking that, which is freaking my mind out at this time of day. So I'm Richard Price. I'm CTO and co-founder at Pragmatic Semiconductor. So we're almost 15 years old, technically not a spin out, but we've spun into the University of Cambridge, and we've developed a manufacturing process for making flexible semiconductor chips. Allows you to extend the range of connected items from the edge to everyday objects using things like radio frequency identification. And we've actually got an ambition of scaling our technology into the trillions of units over the coming decades. We were Series D sort of investment, so we raised about 180 million pounds December 23, so almost 2 years ago. That was a investment co-led by the National Wealth Fund and M&G Catalyst, and we'll maybe touch on that a little bit later in the discussion, why some of those things might be important in this vision. So I've spent 20 plus years working in emerging technology commercialization, both within universities and also in companies as well. So I agree with a lot of what Adam said. I'm not going to repeat some of the barriers, which I'm sure we'll come back to as well. But if I look at from the innovation landscape, some of the things I see coming through, I think there are a lot of foundations there that we should be optimistic about if we can solve some of those challenges. We have a fantastic science base, and I think there's an opportunity to continue to invest in that, providing we're looking at investing in what is truly world class and making the right decisions there about the curiosity-driven research. That's always been a strength, and I think we can continue to do that. There've never been more startups than there are now in the UK, so we've definitely got something right in that space, certainly over the last 10 years or so. I think the challenge, which I'm sure we'll come back to, is how do we go from great ideas, great science, early stage proof of concept and startups into scale-ups. And there are a number of moves there that the government and others are looking at, and I think that's the area where we need to focus over the next 5 to 10 years, is how do we get more businesses through that funnel, because it's no longer about unicorns, the sort of £1 billion, £1 billion value companies. We've got to get to decacorns, which is £10 billion or dollar valuation. Then you've got to get to $100 billion. We've had almost no companies at that valuation within the technology space. Arm would be an outlier there. And then to get to $1 trillion, that's another 900 billion pounds or dollars of valuation. So that is a big, jump from $1 billion to 10 billion to $1 trillion. So we got to sort of build the infrastructure, the whole business environment, the innovation ecosystem to allow more companies to have the chance of getting through to that. And then, potentially then we'll get to the £1 trillion pot at the end of the rainbow.
Thanks, Richard, and definitely a lot of that sentiment came through this morning. As we were discussing just now, the Science and Tech Committee shared their latest report on kind of financing and scaling UK tech, of which the ambition was recognised, the great kind of thriving environment for startups, but kind of dropping off obviously at that scale-up stage where it's quite a kind of, I guess, visceral title of kind of bleeding to death, the science and technology growth emergency. If I come to you, Catherine, from Genomics.
Thanks, Mia. I like how you turned the dollar into pounds. That was very nice. So I'm Catherine. I'm the Chief of Staff at Genomics. So Genomics, we're a science-led tech bio organisation, and what we do is we harness the power of large-scale genetic data sets, and we help to power preventative and precision medicine solutions within healthcare, so helping individuals understand their risk of genetic risk of disease, of common diseases such as cardiovascular disease, type 2 diabetes, obesity. And then we also use that data to also power our life sciences side of the business, so helping life sciences companies accelerate their R&D processes using genetic insights. We raised our Series C last year and have raised £100 million to date from leading investors like IP Group, Foresight Capital, F Prime, and are located. We have offices in the UK and also in the US as well. So to the question of does the UK have the foundations to really scale companies? I think probably to start on some of the positives, if we compare the cost of, doing business in the UK versus the US, there are elements of doing business in the UK that are cheaper. So talent is cheaper. We talked about the I guess, the great science hubs that exist in the UK, the Golden Triangle that exists in the UK. Genomics, actually, we have offices based in London, in Oxford, and in Cambridge. And the reason for that is that we can hire the very, very best talent, the very best science talent from all of these locations into our business. I think also if we look at, I guess, real estate costs, IP protection in the UK, also very strong and positive environments. I think obviously the energy costs are definitely a challenge, and I won't get us started on that again. But really, I think the transition to that growth stage is really about seeing where is that capital coming from and how can we inject that capital into these businesses. So thinking about institutional capital that exists within the ecosystem and how we can channel that to growth stage companies. I think there's been lots of positive talk in the last year around this. So from the Mansion House Accord, I think Sterling 20 announcements that came out recently, and really how can we turn a lot of this conversation into action, into acceleration, and also really think about how to make that more than just voluntary. I think a lot of these are voluntary commitments, and how can we accelerate that further?
Thanks, Catherine. And finally, if I come to Chris, and particularly on kind of the investment with obviously expertise from BBCA.
Thank you. So I would agree again with a lot of what people have said on the panel, and I guess just maybe to add to it in terms of what do we mean by £1 trillion company. The closest I guess we've come in the UK, if you just look at the sort of private valuation of ARM and DeepMind, probably in more than 100 billion plus, but they are listed in the US. Google DeepMind. How do we ensure that we have the capital to really invest in those companies, get them to list, stay here, is a difficult question. There are only 2 countries in the world that have $1 trillion company, China and the US. We're a much smaller market. But the upside of both those companies is they do have substantial operations in the UK, and that's really good for us. So I guess, are we asking the right question in terms of that? I think it's a very good ambition to have. But when we look at it on the investor side, venture capital funds in the UK, we have a brilliant ecosystem for what we call seed and Series A. So even for £1 million, even for £10 million, there are really excellent UK venture funds who have really good expertise at building product market fit, getting sales, turning, and growing the companies. But we do just not have the funds and the ability to invest in those companies at the later stages. So we tracked where UK businesses raise their capital, and deals under £1 million, it's 97% UK money. You go to 20 million, it's 70% overseas, largely US. You go to 50 million plus, it's 92% overseas. We just do not have that weight of capital at the later stages. And it's you look at the sort of hyperscale companies in the UK, the newly minted unicorns. You see that happening again. We have 185 unicorns or something the government trades. We've had several more come through this year, and they've reached unicorn status in a much quicker time, 2-3 years. You look at what Lovable did in Sweden, they went from 0 to 100 million ARR in 8 months. So you have these real hyperscaling businesses, and we're in, the danger now is that we miss a lot of those companies really, and again, that issue which we've all described happening again, especially in this really sort of fast-moving AI world. And just taking 11 Labs, had received really a decent seed round in the UK, all UK investors. Got backing from the Business Bank, great story. As soon as it's scaled up and is now a unicorn, Sequoia stepped in from the US, and they move so quickly. People in these rounds, they can deploy capital in 48 to 72 hours. It's scary how fast they move and how we do not have the capital and we do not have the sort of ambition to really double down on those companies. So that's something which I think for starters we need to change before we get into pensions and everything else. But I'll leave it there for now.
And I guess if we stay on that topic of kind of investment capital, as you mentioned, obviously there is kind of all of you kind of mentioned there is, or we tend to have a healthy kind of startup environment in the UK, but then when you look at that scale and kind of Series B plus, there tends to be kind of a drop off. I know obviously the kind of valley of death, but the government have done quite a bit, as mentioned as well, obviously on kind of Mansion House, etc. But do you think that the government is kind of moving fast enough on this, and what more could they do to kind of, I guess, drive that pace? I know from BBCA you had spoken about the likes of French TV scheme, or looking at the public finance institutions, etc. So perhaps if I come to Chris first.
Yeah, sure. So I think the government previous and current have done a lot to change, it's compared it sort of turning an oil tank around in terms of UK pension schemes. If you go back 30 years, they were all, the largest investor in UK venture funds was UK pension funds, and now it's been zero for years, basically. I mean, if you take, this is defined contribution pension schemes, which are the largest growing part of the market. You might see the odd investment from local government pension schemes, but, it's been 0 or 0.1% on our data. Sort of changing the, but it requires expertise in, changing the direction we've been pushing our pension funds to invest, which is in gilts and very, very low, what we call low fee products, investing in venture capital funds, which is hands-on investing, deal sourcing, etc. It does cost more, but we've got data, on the returns data going back 40 years. It's worth it if you do it in a well-targeted, diversified way, but it does require real expertise, which the pension schemes. Mansion House was announced. We had really good conversations with them. They're all like, okay, we can sort of, we see the need for this and sort of back in the UK, and we think that's great. But it's very complicated and a very different way of investing. With, it is in a sense riskier, because a lot of startups go bust. There's a lot of, but as I said, it's diversified. You pick those winners. It's a great way to get, and it's a great way to drive returns. And also, we're not saying bet the house on this. We're asking for, 0.5% of UK pension assets would put 5 billion into UK startups. That would be amazing, and would really solve some of the issues we were talking about before. And it's even if it all goes wrong, it's only a tiny amount. But I don't think it will. I think it will be an excellent investment and something where some of the biggest investors in our member funds over the years have been the Ontario Teacher Pension Fund. Ontario teachers have been benefiting from the returns that UK tech has been building for years. UK teachers haven't been. So we really need to change that and change that attitude. And there are various proposals we put forward on having a sort of UK TIBI scheme, what we call the Nova scheme, which is using France did this very well. Macron went round to all the large insurance firms in France and said, I want you to put so much money. It was, I think, 5 billion, now 10 billion pounds into the French tech ecosystem. And we're essentially, we have a different makeup of institutional investors in the UK, but we've basically something similar to kind of just turbocharge that pace. Because at the moment we're having lots of good conversations. The commitment in the original Mansion House compact on the Accord was to put 5% into private markets, including venture, and at the moment we're on 0.6%.
Yeah.
And as I said, the proportion of that 0.6%, which includes all private markets, which includes private equity and various other types of investments, going into venture is still very, very small. We've seen some investment this year, but we're talking tens of millions, not the 5 billion I mentioned earlier. So we're still a way to go.
And I guess coming to you, kind of, Catherine, and I know previously we spoke about the need for obviously kind of catalysing private investment, whether that's through public investment, etc. But you touched on just there, kind of the risk mindset and looking at maybe kind of what's going on in the US. Do you think that obviously we have this great kind of ambition, but that there is kind of the right kind of culture and mindset in the UK to succeed?
Yeah, it's I think the question of culture and mindset, sorry, now it sounds very different on this one. The question of culture and mindset is, I think, a very important one. I think, Chris, you mentioned kind of the understanding of where risk is when investments are made. And I think for institutional investors and investors in general, actually understanding what the incentives are and making it very clear is very important. So I think in France, the TB scheme actually, part of why it's so successful, obviously, a lot of ambition behind it, a lot of political ambition behind it, but I think also incentives were exceptionally clear to the institutional investors of why they should be doing this, why it was good for their customers to diversify risk within their portfolio, and also how the returns could also be larger within that. So I think that is a clear part of it, making those incentives, very, very clearly understood across different parties. And then in question of risk appetite and I guess, do we have a culture that is happy to accept risk, to accept failures? I think that definitely, in the UK versus countries like the US and Asia, I think in the US, you look at a lot of the innovation hubs and pockets, a lot of the investors here, do have a higher risk appetite. They are used to investing their capital in larger tickets in these kind of organisations. Whereas in the UK, we don't have that same level, I guess, of risk appetite or maturity. So yeah, I think the short answer is we could do better.
And I guess coming to you, Richard, on kind of that confidence to invest, kind of in the UK, the risk mindset, etc.? Do you think the pieces of the puzzle are there?
So I think we need to think about risk in a different way. So I tend to view risk more as, what's the risk of not doing something? So if we look at, the playbook of the last 40 years, it's not worked. So, going forward with the same approach is not a plan for success. So actually, rather than thinking about, let's say, venturing as a kind of a risky thing, it's actually riskier if we're not doing this diversification, and we're going to miss out, and we do miss out. So I think what will change the needle there? Well, some more urgency. I think a clear vision for the country that can be communicated to the general public. At the end of the day, it's our money, so you've got to sort of communicate to all of us why are we investing our money in these things, and what are the benefits that we're going to get individually and nationally in that. And obviously, success stories are going to help that, going forward. So I think there are, it's the right approach. I think whether it's the kind of Mansion House Accords or rationalisation of local government pension schemes, getting more capital, having capital that's looking at a more diverse set of investment opportunities. But it's really important, as per the sort of discussion before the break about AGI, we've got to communicate and connect with the general public about why this is important. What's the vision for the UK and the UK economy, and how is it going to generate prosperity for the country over the next 10, 20 years?
Absolutely. I guess from techUK, we definitely kind of echo that sentiment. And obviously the UK has big challenges ahead: productivity, growth, and at the heart of that is really the vision for where kind of tech and digitisation can make a difference. I guess coming to another kind of part of the puzzle, kind of talent and skills gap that we heard kind of a bit on the previous panel. But I guess from each of your kind of perspectives, and I guess coming to you first, kind of Adam at KO Data, do you feel like the UK has kind of a healthy talent pipeline to support the kind of roles that are needed for that kind of scale?
That's a great question. Perhaps before I answer that question, just to say, I think I would completely agree with what Catherine and Richard said. On the kind of the fundamental risk element that the UK has, the UK does. We appear to have, from my work within the US, used to work in Iceland, now work in the UK. We do seem to have a fundamental, stronger risk aversion to capital expenditure, and obviously at a data center level, we are doing massive capital expenditure. Other countries seem to have twigged this kind of AI race idea that time is short, we need to get cracking. And there's this notion of build it and they will come. And if you look at the deployments of the massive amounts of GPUs that are going into Saudi Arabia, France, Japan, the US, Brazil, whereas the UK has a much more tentative kind of, we'll see if people want it, and then we might build it after we've decided they definitely do want it. And so you're seeing millions of GPUs going into Saudi Arabia. What are we doing? We are investing in 10,000 GPUs that are going into containers in a car park in Bristol. There is a from people of my generation, there's a bit of a dad's army element about this, which is frustrating. But to go back to your original question of skills, if I was to look at the three fundamental issues that we have as an infrastructure company doing data centers and digital infrastructure, one, it's power. Two is AI copyright law in the UK, which is very prohibitive to generative AI workloads. But number three is definitely skills. We know from in the industry that if the UK is to build the number of data centers which in theory we need by 2030 to fulfill the compute demand, we need 125,000 more electricians. I mean, that is not something which you can click a finger and suddenly get these people off the street and train them up and everything else. And my colleague Lizzie has an amazing stat, which is if you look at the average age of people within the data center industry, it's generally in the 50s up to 60. So there is already a huge lack of talent coming into the industry. And at some point in the very near future, there's going to be a huge drop-off as the pioneers that set this industry up depart. And so, yeah, this is one thing I think that the government really needs to tackle, which is that unless we've got these people coming into the industry, we're going to really struggle.
And I guess interesting to see that the AI has been added to the curriculum this morning, which may help that pipeline.
So Jensen Huang, who knows his stuff, doesn't often come out with things that are wrong, has said that, look at the AI revolution that's taking over the world. Who are the people that are going to build the AI revolution? It's electricians, it's engineers, it's humans who we need in great amounts to come into the industry to actually make all of this technology happen.
Absolutely. And Richard, I guess the same question to you.
Yeah, I guess similar thoughts. I'll maybe answer it in a couple of ways. In respect of our own business, it's a mix in terms of skills and talent, and I take the view that actually it's a lot of our own responsibility to be developing some of those pipelines, which will take multiple years, as well as we recruit internationally, and some of those skills are quite specialist, and some are harder to recruit than others. There are, I guess, immigration is a touchstone issue, and I don't think that's going to change for the foreseeable, but it does present challenges with bringing in people from overseas, particularly changes from some of the residency rules and so forth, that if you've got some higher skilled workers and they're coming over and they're sponsored with their family, it's a fairly insecure situation for those people. So that's not a great way to attract talent. Maybe sort of briefly building on Adam's point, and maybe broader than the tech, for the UK economy, there's a shortage of something like 250,000 people in the construction sector, which is electricians and skilled jobs. They're maybe not tech jobs, but actually they are fundamental to what we want to do in green energy, what we want to do in infrastructure and so forth. Yeah. And I would go back to maybe my earlier answer, which is if we have a clear long-term vision of where we want to go as a country, we can actually do this and lean into skills. I think it's good that the government has changed the rhetoric around university and talking about skills more broadly now, because we do need electricians, we do need construction workers, as well as AI, data scientists, engineers more generally.
Yeah, absolutely. And I think while it's obviously good to see that there's more investment going into the kind of planning to enable kind of the digital infrastructure build for the tech sector to thrive, you need kind of the talent and skills in place to be able to do that build as well. Catherine, if I come to you on the same question.
Yeah, sure. I think obviously we're in the field of genomics, and we're lucky to be blessed with two fantastic universities that have a collection and pool of talent within this area. So I think that's a fantastic asset for us within the UK. But I think maybe if I go more broadly to the general talent and skills question, to really help scale UK industries UK tech broadly, I think we've talked a lot about the tech, and I've talked about the science talent as well that needs to be brought into organisations. But I think also when you hit that stage of really growth and scaling, you also need to have that experience and that that talent coming in that really has experience in that scaling journey. So that commercialization experience, that experience of actually going to get those large size tickets and knowing how to invest and structure your organisation for scale. And that if you look at just because of the number of companies that reach that stage within the UK versus countries, versus the US versus, abroad, there's less of that in the UK. So I think that's definitely one area in terms of talent where you do find less of it here. And I think the other piece to bear in mind as well, I think this was touched on in the last panel, is that we talked a bit about risk, and that also goes to when people are deciding where they want to start their careers and where they want to spend their careers in their early years. Do they view entrepreneurship? Do they view early stage startups, growth stage organizations as a place to actually gain that experience? experience that might be as valuable as going into the city, going to consultancies. I don't think we're quite there yet, to be honest. So I think that level of, I guess, acceptance, understanding, and really getting people into, thinking that that's a good career path right from the start of their career is a really important step for us.
And Chris, I guess coming to you from the kind of, I guess, investor VC side of things, do you think there's, I guess, enough kind of recognition or the focus is on kind of the skills to invest in kind of tech specifically? I know that's very specific.
If you are, whenever we poll what the, investors, VCs think, are the main sort of pain point in when they're trying to grow their companies, talent's usually number one. I mean, it's pretty much every year. So Brexit, I think, was 1 year. There are other things that maybe come in. Talent's always there, one or two, and there are, a growing role within venture capital firms is having a talent partner, someone who can, you've got a very specific tech company, and they can come in and they can find the right person. So there might be a handful of people who can fill that role in the world. And it's a very competitive market. So I think it's a recognition of that. And do we have the right incentives to bring people over? I mean, as you said, around, sort of people bring their families over, having that sort of security, probably still needs to do a bit more work there. Do we have the right incentives in terms of, the companies themselves? Enterprise management incentive is a great scheme, but, the limits need to increase. There's been rumours that might be happening. That's a really good way to keep people in early stage companies, as you were discussing, to give them a share of that upside and incentivise them to do so, to, potentially, not have the salaries they'd get elsewhere, but have, believe in a great business and then get rewarded for staying there and building it. It will always be a challenge, and it's an ongoing one. But are we pulling all the right levers to make sure we get the talent and keep it here? There's a bit more we can do.
Absolutely, and echo you on the enterprise management incentive and looking at how that can definitely retain and recruit kind of talent for scale-ups. That's something that techUK continue to call for, and who knows at the budget if we see movement on that. I guess if I turn to kind of each of you now, with obviously we started with this headline question, and I'm sure you may be yourselves kind of wanting to reach the ambition to be the first kind of $1 trillion tech business. Maybe less so from Chris, but it could happen as well. But if you kind of, how are you as businesses kind of innovating to stay ahead of the curve and kind of achieve scale and kind of lessons from the market? So what is, I guess, one piece of advice? We may have people in kind of the audience who are kind of startups looking to kind of achieve that scale. Come to someone first. If I come to you first, Adam.
That's a hard question to answer. How are we? Well, I suppose it's two ways, really. So one, again, from the perspective of where we are in the industry, we have a very tricky challenge, which is that we have to try and build infrastructure, so bricks and mortar infrastructure, that will be able to look after technology which is changing every 6 months. I mean, the new NVIDIA GPUs and chips come out, the densities are going up, the rack densities are going up. We have to try and accommodate that while at the same time building a building which can be financed, which can have a future life of, say, 20 years. I mean, that's in the interface between an old traditional industry like building and technology is really hard to manage. So one of the ways that we are doing that is trying to build everything modular. So everything can be slotted in and slotted out depending on how technology changes. That could be the power delivery to the rack, that could be the cooling of the servers. But we are having to try and make sure that the buildings that we build, and to give you an example, I've been working in data centers now for 15 years. When I started in data centers, a big deal in data centers, a really big deal, a great Christmas party was if you did a 2 megawatt deal. That was huge. A 2 megawatt deal was massive. Now we're doing 100 megawatts. We're building buildings which will accommodate 100 megawatts, 200 megawatts, 300 megawatts. We're putting 100 megawatts in a single data hall. So the densities are, and the speed of this is incredible. And if you imagine then trying to design buildings The buildings which we designed 15 years ago are still operational now. So if you try and look at how that all intercedes, it's really, really difficult. So for us, it's about being modular, being completely flexible and adaptable with the architecture that comes in, so that the AI developers and pioneers can still utilize our infrastructure depending on what they're doing.
And I'd be intrigued to know kind of what you have now, if it's at that scale for kind of a Christmas party. Richard, if I come to you next.
Sure. Yeah. Well, actually, we also have a modular approach to our manufacturing design. I mean, what are the ingredients of making a great business? I think you've got to start with good ideas, and we talked about that. You've got to continue to innovate. So we, as well as making sure that we are focused on delivering what we're doing now, we're adding capacity. Typically, that's a minimum of 12 months to add additional capacity. We're also working on the next generation and the one after that of technology development, and it's a relatively complex set of activities, but we've got to continue to innovate, as well as have that pretty rigid focus on delivering in the very short term. And for any kind of company going through growth and scale up, making sure you don't run out of cash is absolutely crucial. So you've got to make sure that you've got enough petrol in the engine, you've got a good innovation pathway, as well as focus on delivering the products now as well.
Thanks, Richard. And Catherine.
Yeah, I think in a similar vein to what Richard was saying, first of all, making sure that our science and technology is best in the market, continues to be best in the market. Actually, genomics was spun out of Oxford University by 4 of the leading statistical geneticists in the world. So for us, it's we're built on a foundation of great science, great technology, and it's about maintaining that and making sure that we get the best talent to do that. And then I think, as Richard was saying, it's making sure that the products that we are bringing to market and we are innovating in are being developed in the right way and being developed according to user needs on the market. And I think that that's a really important thing, to make sure that we're evolving our products based on what customers want and based on what the need is. So to talk about probably one of the products that we recently launched actually this October, our Life Sciences SaaS platform. What's really exciting about this platform actually is something that in-house scientists were using for the last 10 years. We saw demand from the market because we saw life sciences and R&D teams actually could use this product. So now we have not only our in-house customer teams that are giving us feedback, but also our pharma partners that are doing the same. So really, it's about making sure that we understand how that product can grow and how it can grow to meet the needs across R&D and not just statistical geneticists. So it's a really exciting area for us. And I think finally, one of the other big things for any business that is really looking to achieve scale is a laser focus on ARR. We see that a lot of organizations can hit ARR just so much earlier than they used to do because of, I hope that's okay, can achieve scale, they can achieve ARR much earlier than previous. I think, companies have been hitting 100 million ARR in, a matter of 5 times the time that it used to take, right? So, for us as a business, it's making sure that actually, to really achieve that scale, that's a key metric that we're focusing on.
And I guess, Chris, if I come to you from kind of BBCA, when you're seeing, I guess, from the maybe kind of venture capitalists and private equity.
Yeah, so I wouldn't take business advice from me, but I guess where we can help and what I say to, I do go out and speak to founders and whereas, and trying to educate them on the options that are available. I think venture capital is great, it's what I work in, but it's not appropriate for everyone. Venture's looking for the exceptions of the exceptions, those really small number of hyperscale businesses. If you're growing 40-50% a year, that's not enough for a lot of venture capital firms, even though that's a really hard and really amazing thing to do. That's not the kind of metrics that they're often looking for. They are looking for that, as you say, that those real hyperscale type businesses. And there are other options available, and others, should bootstrap or look at alternative, forms of finance to, to sort of grow the business in a different way, and also understanding when you take a certain type of investment what that entails. So I oversee production of standard term documents for that venture capitalists use. So you'll get a term sheet from a venture capitalist, which is great because you see, oh, they're going to give me £5 million. That's amazing. But then there are a lot of legal clauses and other things in there with strange terms which are very useful to understand. And like I said, as long as you understand what those are and you understand what the type of metrics they're looking for, that's good. If you don't and you get stung at the end of it, if things go wrong, you need to understand that too. So I would just say, really pick your investors carefully, looking at it from the other side as well.
That's brilliant advice from kind of all of you. I realise I've majorly gone over on dominating the questions, so I very much apologise for that. But opening up to the floor, we do have a bit of time for some questions. So if we do have anybody in the room who would like to ask a question to her, we have a question here.
Testing, good. Thanks for the panel, really worth staying around. I think for the last one, for those who left, they missed out, I think. I'm a colonel in the British Army, and we are looking at issues, a lot of which are resonating around what's been discussed today. So people skills, edge computing, data centers, all very relevant to a current military, if we look at what's going on in the Ukraine. And my question, though, is if you were to take a punt, and it sounds like I'm talking about defense here, which sector do you think this $1 trillion company is going to come from? Probably not your own sector, because that would be cheating.
I mean, not that I'm an expert in this area, but if I was to take a punt at this point, I'd say quantum would be where I would lay my money, just because I think there's still a lot of blue water there. So yeah, it's vague, but that's where I'm sticking my neck out.
Yeah, sorry. Go.
I would say, judging by my team, Yorkshire Tea probably could get there. So I would say the obvious one from my sector is probably something involving generative AI. That is the predominant form of compute. It's the compute that we are seeing the tremendous amounts of workloads that are being funneled through the cloud on. So something, there are other challenges related to that, but around language models and generative AI, probably I would have said.
I think you're aiming for defence, so I'll give it a go. And I, it is probably in the last year even, the biggest area of growth in, where venture capital funds are investing. And a lot of the questions we get inbound is, it's not something they've done before. We've not had the appetite to do. So how do we make sure we have the right frameworks to turbocharge defence companies, make sure they have routes to procurement, they have routes to exit, which is where we haven't. So we're making sure we have all that lined up for these amazing companies we're now seeding at the early stage. So I think maybe in 5-10 years time it could be a defence company, because you can see where the need for governments to deploy more, and strategic needs from a security perspective. So I think maybe not some of the other companies we were well established routes to market, and I think defence we need to sort of make sure we join all that up, and then yes, it could well be.
Yeah, I think for me, I'd probably agree with you, Adam. Something in generative AI, and I think we just look at the scale of some of the companies that are, that are growing in this area and the pace at which they've done it. I think, that's where I'd put my punt.
I think we have 2 questions actually. So if we, go along. Yeah.
I just want to pick up on, Adam, one of the comments you made earlier about that attitude to risk, the build it and it'll come type thing. What do you think can be done to disrupt that in a positive way and change that? You could argue it's maybe in many ways a function of many years of legacy building, great industries, and then of course we're in an inflection point in terms of how we view risk now. You could argue that, the riskiest thing you can do is to wait now, right? It's a momentum game. Just interested in your thoughts on how we could improve that attitude to risk and do better on that.
Oh, that's a great question. I'm distraught you've asked me that question, but never mind. I agree with what Richard said as well. I think you just mentioned there too, which is that it's a culture change of looking at risk, I think, at the very top level, which is that there is a larger risk of not doing something rather than wondering whether you have done exactly the right thing. So I think I mean, how do you deploy culture change across a countries like that? I'm luckily not qualified not to worry about that bit, but I would say that's probably the first part. And the second part, I would say, is it's probably a case of making sure that the stakeholder partnerships are in place with, at the moment, some of the big US providers of compute to allow. We've got so much talent in the UK in terms of our entrepreneurial AI talent. And at the moment, there is a gap between the infrastructure that they can use and access to that infrastructure. And I think allowing them to have greater access to that infrastructure it softens the risk a little bit, and then it brings those projects to a point whereby finance and investors are more assured about what's going to be a success and what's not going to be a success. And I think that very early stage access to GPUs, to compute, is a real problem in the UK, which would alleviate that.
Sorry, do you want
You go first.
I think I go back to the storytelling. I think we need to quickly recognise that failure is actually essential for people to develop. So I think Catherine mentioned earlier about lack of talent and experience of growth. We kind of got to embrace failure and encourage it to happen more quickly, because you look at China, for example. They invested in like 100 plus battery companies with the intention that a couple will come out the other end and succeed. I think we've got to take that mindset of actually encouraging more entrepreneurship, but expecting and embracing that many of those things are going to fall over. And I briefly just changed my answer to the last question. Actually, I think ARM may well be, boringly, ARM may well be the first $1 trillion tech company in the UK. If you look at how many ARM cores are in the latest sort of NVIDIA GPU, it's something like 88. So don't write them off getting there.
Catherine.
So I was going to say, actually, probably another way to view risk change is also to view it from the organisations themselves. So not from so as an example, I take an example from the life sciences sector, and something that happens very frequently is that a lot of commercial clinical trials, doing them in the UK versus quite a few other countries, it's generally cheaper to do them in the UK. There's R&D tax credits. There's quite a few benefits for doing that. Obviously not compared to everywhere, but compared to quite a few other countries. And however, what we are seeing is a lot of companies that end up don't doing them in the UK and they do them elsewhere. And the reason for that is that sometimes the process and the setup of them just takes so long. The opportunity cost of waiting is just too much for a lot of these organisations. So by not having the right risk attitudes, and even though the incentives could be there, like the R&D tax credits, it just doesn't matter to some organisations, because they'll just, they can't wait, they'll just go and do it elsewhere. So I think really understanding risk from an organisation's point of view and viewing it as an ecosystem, even if you have incentives within the ecosystem, actually, can those incentives be taken? No, because there are other blockers that are existing in the ecosystem. So how can we look at risk from the company's perspective, but then also as the ecosystem as a whole? So just thought I'd add something from example from the sector, really, where this impact happens.
I think we have time for one more question. If we just, do a bit of a pass along. Thank you.
Thank you. Sorry to finish with such a hypothetical question, but as you were talking, I was thinking about other really successful companies that we see worldwide, and how they were allowed such a long lead period until the frontier reached them. So, for example, Intel was funded quite heavily by DARPA, Texas Instruments was funded quite heavily by the Department of Defense, ASML was funded very heavily by a number of corporations who very much needed their technology, so they put decades into that. My question is, does the UK have the capability and the infrastructure to fund these companies so they can wait out until the frontier arrives?
Oh, that's a great question, isn't it? That's a bloody good question, that, blimey.
Well, I'm conscious I've talked quite a lot, but maybe, I did say we're sort of almost 15 years old, so you can view that as a good thing or a bad thing. I think that's not that unusual in the UK, but I don't think there's that many of us either. We've been fortunate that we've had an investor, and it took us a while to get to this point. We had 4 years of bootstrapping, and then our first venture fund was led by Cambridge Innovation Capital. We were one of their first investors. Their model was very much patient capital, and recognizing what's now called deep tech takes a longer time period because it's built on fundamental science, and translation of that, particularly around areas like advanced materials, can take decades. So we've been fortunate. I think there are a number of investors that play in that space, and I think that number's increased. The challenge becomes, how long is that patience? And how do you then scale, and how do you scale in the UK? So I think the sort of deep tech as a concept has emerged in the past maybe 5 years, although it existed prior to that. And I think there's, as I said earlier, there's never been more startups than there are now. So I think there's a recognition that you can extract a lot of value from that. And you sort of, you mentioned, examples in the US, and that can lead to, manufacturing in some cases. And I think manufacturing is a good thing to have. I think there's a recognition now, probably in the UK, that we need to have manufacturing, and it's not something that is a dirty word, which maybe it was, for the past several decades. And there's a spillover benefits more around supply chains and ecosystems that build around that. But it does require that capital investment. It requires that infrastructure nationally, and to think about, again, I go back to the vision of what do we want as a nation to enable that. So, we've been able to work through that. I think that's probably unusual, but not unique in terms of the UK.
Yeah, and we have ARIA, right? Which is the UK sort of version of DARPA. We hope hopefully not, won't suffer from being the brainchild of Dominic Cummings, but it has some really talented people involved in it, and has received backing from the current government. And I think is a really, having that really early stage risk to really, think about sort of, really thinking long term. That's really where the government can play a role. So we have that, more open, mind about early stage regulation and things like that. So so I think the government's doing the right things here. Whether the current government will benefit from it in 3-4 years' time, maybe not, but we'll see the fruits of it in 10 years' time, and that would be amazing, hopefully.
Catherine.
I think every company has its own scale journey and its own growth journey. There are some companies that explode after a couple of years, and some that will take 10 years to really achieve that scale, right? And that's dependent on many factors, including the industry that they're operating in. Similar to Richard, not quite as old, but genomics is nearly 11 years old, and 10 years ago versus now, if you look at the industrial strategy and a lot of the thinking within that, the NHS 10-year plan, life science sector plan, genomics is mentioned so heavily throughout it. 10 years ago, it was a much earlier area that people were working in. So, it's some sectors do take their time, but it's part of it also is making sure that your investors are understanding of the sector. They understand that when it is going to really be able to be commercialized and where its strengths lie, and that you're communicating to them the right way, and also you're picking investor pool in the right way as well. I think, Chris, you were talking a bit about that earlier as well, that having the right investor pool around you is critical.
I would say the short answer to your question is no, and the reason I think no is because the compute industry that I see right now has complexities in it which I don't see any other industry having in it. So, for example, 70% of our industry is run by 3 companies. Those 3 companies are arguably more powerful than most national governments at the moment. You've got someone like NVIDIA who is behind those 3 companies, who now has a higher value than the entire country of Germany. There is a race. There is a race on. There isn't the time, I don't think, for governments to provide that type of support to get to the frontier, because the frontier is moving away at such a fast pace. By the time this government has got to the point where it's made a decision to do that, that race will have been won and lost. I mean, just to give you an example, look, AI copyright is one of my absolute bugbears. The UK has a much harder stance on AI copyright than the EU. So at its very basic level, if I'm trying to sell compute capacity to a hyperscaler, and I'm saying place your capacity in the UK, they will turn around to me and say, no, we won't place it in the UK, we'll place it in France. Because if we could place it in France, we can do text and data mining in France that we can't do in the UK. There's a fantastic entrepreneur called Jennifer at Brilliant AI, who is an entrepreneur, UK entrepreneur. She can't do text and data mining on her large language models in the UK, so she has to use Mistral's infrastructure in France, which is insane. So if you look at AI copyright, and unfortunately we don't have an Elton John or a Paul McCartney to bang our drum on our side of the fence, but if you look at it, it's supposedly going to be cleared up in 2019. That's when it will next be solved, in 2019. Race will have been run and lost at that point.
And I guess on that note, but concluding what has been a very kind of thought-provoking and just brilliant panel from all of you, so thank you so much. And I guess definitely shows that we do have the ambition from experts and yourselves to really reach the first £1 trillion tech company. So thank you all today to Adam, Richard, Catherine and Chris.